CPIstrategy.com.
This is Chris looking at the upcoming Friday, July 18th trading session. In front of you is the economic calendar. We have a relatively light day on Friday again. It's been a kind of a mixed week as far as involvement in the markets, but that being the case, there are a couple things worth paying attention to. The Chinese-Asian session really doesn't have much. Euro zone really doesn't have a whole lot either. But when we get to North America, you can see that we have the CPI core and the CPI year over year, the full CPI. We are anticipating 1.7% for the core and 2.3% for the year over year full CPI. Those can be market moving events. Truthfully, though, that tends to be limited to the Canadian dollar and perhaps the Toronto Stock Exchange. If they are completely out of whack, though, that can have a little bit of a knock-on effect in America with the stock markets themselves. Later on in the day, we have the University of Michigan confidence numbers out of the United States. That's the big number for the day in my estimation, and that certainly has an effect on the equity markets in the United States. The Dow, the NASDAQ, the S&P 500, which all look a little bit on the back foot at the moment. So having said that, the U of M numbers might end up actually being something to pay attention to. 83 is projected, 82.5 was the previous number. With that being said, let's take a look at a couple of charts. The Euro-US dollar pair, as you can see, did very little during the session on Wednesday as we're approaching the vital 135 support level. The market more than likely will bounce from here, but this is an area that needs to be watched. If 1.35 gives way, this could open up the door to the 1.33 level. Otherwise, I would anticipate a bounce probably back to what's been fair value recently at 1.36. Over in the British pound US dollar pair, you can see that we did have a negative day, but again, this is one of these markets you have to take in context. We are still very bullish looking. It just looks like we're trying to figure out a way to get above the 1.72 level. Once we do, this market should be free and clear to head to the 1.75 handle. And as we have Canadian numbers during the session, looking at the Canadian dollar, you can see that the US dollar has gained a little bit during the session here on Thursday. 108 still looms kind of large though, so really, if we get poor numbers out of Canada, we could leapfrog the 1.08 level. And in my estimation, at that point in time, that will send the market probably looking for about 109.5, with a pretty significant resistance at 110 as well. Ultimately, I do feel that that level is going to get broken, the 108 level, because of the uptrend line. The question then becomes whether or not it can happen during the Friday trading session. At this point in time, I would be a little suspect unless, again, the CPI numbers are horrible. And finally, looking at the S&P 500, you can see that I have a little bit of a channel drawn here. We tested that at the end of the session on Thursday. It does look like a market that's in a little bit of trouble, but quite frankly, the trend is up. There's no way to deny that, and there are plenty of support areas. So really at this point in time, I'm standing back myself, looking for a supportive candle to go long, because you have to keep in mind above here is the 2000 level, and that is a large psychologically significant number. So a pullback, a supportive candle, and then perhaps another attempt to break through to the upside wouldn't be a huge surprise for me. And that is a look forward at the July 18th trading day.